Welcome everyone back to this week's Member Town Hall. I'm here joined today by Nick.
Hello.
And Leon and Bergs. How are you, gents?
Good morning, guys. Hello.
Really well, thank you.
It's good. Lot to get through this week. Thanks, members, for joining us live. Just to start off with a bit of a market update, then we'll get into a lot of mainly the chunk of what we'll talk about today is to do with regulations. Like throughout last year, Nick especially sort of really want to emphasize this as something that for investors is like almost, you could argue, the most important thing going on in the asset class. You've probably got scalability issues plus regulations are probably the two biggest things. And we've had a lot of developments this week, so looking forward to getting into that. Just a bit of an update for anyone that is either listening on the podcast or watching on YouTube. If you do want to, learn a bit more about what we do here at Collective Shift, I do recommend heading over to the website collectiveshift.io. As of this week, we've now got Ben off booking in. You can book in some time with Ben to go through a strategy calls to plan out, I suppose, your whole crypto, how you want to participate in crypto. Either as an investor or not. And yeah, that's basically something. So he's booking out quickly. So make sure you head over to collectiveshift.io and lock some time in with him to take your crypto game to the next level. But yeah, gents, we'll kick things off with a bit of a market update quickly. Just in the last 24 hours or so, BTC and ETH have really taken a hit down. So for the week, BTC or Bitcoin's down about 8%, down a bit below 22,000. And we've got ETH now coming back about 6% for the week, down to 1,550, so 1,550. So yeah, a bit of a pullback as we sort of warned about last week. And I think in our report this week, we kind of talked about the likelihood of a pullback given how explosive January was. So that's what we've got. Probably the reason for the pullback was it was technical, yes, but then I think it's also been sort of exacerbated by a bit of the regulation-related news that we'll get to a bit later.
Yeah, I saw, I think especially BTC and ETH, they both sold off pretty heavily after that SEC announcement, which we'll get into with Kraken.
For sure. And then in terms of next week, just again, market sensitive sort of events that we're looking at here, definitely the one to watch that I've got noted down here is the inflation data from in the US. That's coming out on Valentine's Day, actually, in the States. So 14th of Feb. So that'll be 8:30 a.m. Eastern time. And yeah, once again, same sort of narrative that's been going on for about a year now. I think, risk on assets, so we heavily dependent on what happens with inflation. So that's really going to be the one to watch next week. But we'll whip through some sort of, sensitive or market sensitive news items that we wanted to sort of cover relatively quickly that we thought, are worth mentioning. And then, looking forward to delving into all these regulatory updates. So what's the first one that we had here, Nick?
The first one's probably major news with Genesis and DCG, which have been under a lot of scrutiny because Gemini, one of the biggest exchanges, had about $900 million worth of funds in their Earn program locked with Genesis. So with Genesis filing for bankruptcy, basically their Earn customers couldn't access that money, and they've been been threatened with legal action. So in some positive news, it looks like they may have come to an in-principle agreement. Not official by any means, but this is a big step forward in coming together, because as we've seen that any more litigation between these big firms is really unstable for the market. So hopefully we can see under this restructuring plan that hopefully these Earn customers can make steps towards getting their money out, and we get a bit more peaceful resolution rather than some hardcore litigation, which I think would be really just bad all around for the space.
Yeah, spot on. It was a bit of an overhang for the market, so good to get that out of the way. And yeah, I think more or less that wraps things up in terms of, it was a big focus December, but I think it'll fall back into the background a bit while they're finishing off the case. But yeah, what we have next here was just a bit of an update, just very quickly on Bitcoin NFTs or digital artifacts, they're sort of calling them. I think we talked about last week, but it's really gone to another level this week. It's, a bit sort of, niche. I think there's a lot of people, making a lot of money. I think I just wanted to sort of mention it here, more so as a warning that there's a lot of people likely going to get scammed because it is to buy currency, to buy a Bitcoin NFT or digital artifact. You got to be very technical. And it's basically, there's no market infrastructure. It's essentially all OTC. I heard this week that they were sort of administering deals on a Google sheet.
How crazy is that? It just screams scam central. Like when you don't have a dedicated, trusted marketplace. And it's like doing it on a Google sheet or like Discord deals with people you don't know. It's just fraught with danger.
Saw a good tweet that was like, you think Ethereum UI is bad, and they took a screenshot over like how it looked like in a Bitcoin wallet trying to send a Bitcoin NFT.
So exciting. In a way, more uses for Bitcoin. There's sort of a bit of a fraction that we talked about last week, but some things to do there with revenue maybe. So block space is filling up quickly. They're mining like their largest blocks in Bitcoin's history, which is significant given it's been around for, 14 years now. But with miners getting their revenue from, block subsidies and their transaction fees, miners have been getting minuscule. That's been the criticism of Bitcoin for a while now. You could see a situation where, hey, maybe miners start to get a fair bit of fees because this block space is starting to fill up. That's if this lasts, this sort of trend. We'll see. I guess that's all I really wanted to talk about in this sort of episode. But just there's always developments, even with such an old chain and the leading chain.
Yeah, I don't know why, but I don't know how it hasn't permeated to the Lightning Network at the moment, because everyone can see Bitcoin can't really handle NFTs. Yes, the UI isn't there, the blockchain fees aren't there. So maybe technically we're not there on Lightning yet. Maybe it'll take a couple of more years. But I'm sure people will see now, hey, there is a small market of NFTs on blockchain, on Bitcoin. So let's go to Lightning and let's make a product, and hopefully we might get some spurring of different dApps on blockchain, on Bitcoin. We'll have to see.
Yeah, for sure. That's a good point. What was up next?
I know we've received a lot of inquiries from members around this AI hype, and we've seen in the market a lot of the top performing coins have been anyone's associated with AI or artificial intelligence. So maybe we could go round table here whether we think this is actually any coins that have actual use case in that space, or whether this is just all fluff. Because I know personally, I'm sort of expecting, as we saw last year, perhaps with gaming and a lot of people pivoting to metaverse or whatever the big narrative was, I'm sort of anticipating a similar thing with whether it's old coins that have rebranded, whether it's new coins that come up that are really targeting this AI focus, a lot of these buzzwords. So that's one thing I'm cautious about. I'm expecting more of this in the market, but the real case is like what has utility and probably deserves to be on a blockchain and actually finds real use case. At the moment, I don't think there is any at the moment, but that's definitely an area to look into.
Yeah, I think in my experience, I've done a lot of AI projects, worked with a lot of data scientists, done a lot of research, and even the projects that we did and the ones that I've looked through that are existing today, I can't really see heavy utility for a coin. It's hard enough to make an AI project actually work and function with the compute, make sure that the algorithm is actually applicable, people can use it, on and on it goes. But on top of that, you want to run a crypto company with a treasury and then get people involved, and you perhaps want to decentralize it. And I just don't think we are there, and I haven't seen a good use case for that yet. That doesn't mean the market doesn't think that AI can actually do that, because the majority of people wouldn't understand that. So there is potentially a market opportunity there for people to trade. But in terms of long-term utility, I just haven't seen it. And I think until we get to the point where we need many participants involved globally, and you have, I guess, robots talking to robots or algorithms to algorithms, and you need to transact value, then I think that's when you could utilize a token. I don't even necessarily know that you need your own token. You could just utilize one of the Lightning networks or ETH or an L2. So that still remains to be seen. But for now, I think it is just hype around AI because we have had Chat GPT and it does work and a lot of people use it. And then when you go to invest, you see AI and then people start picking up those coins. So just beware that I don't think this is a long-term thing. I think it's very short-term based on the hype, just generally around Chat GPT.
Yeah, I kind of agree with this as well. I see it kind of like forming as a mini narrative in crypto. Everyone's bored in the bear market. They need something to latch onto. And AI is in the forefront of everyone's mind with ChatGPT, as we just said, and other AI tools coming out here and there. And so it's on everyone's mind. Everyone's bored. Oh, we got to get something. Oh, these coins are going up. Yes, let's all get on the train. And then it becomes a little bit self-fulfilling prophecy. But as we saw with the securities narrative before, the gaming narrative, the metaverse narrative, it's not really substantial at the moment. But I don't know. I'm sure people are aware of Andre Cronje. He's the Phantom kind of guy. He's the face of Phantom. He did come out and he actually made a statement, and I just want to share that with you guys here. Just very quickly, he said people should stop asking Phantom about AI. He gave two small sentences. It's like, blockchain is slow by centralized standards, and it's transparent and it's secure, which I agree with. And then he says AI is high throughput, opaque, and a black box. These two don't mix at all. There are maybe very specific cases where they might mix, but generally, no. So he's like, nah, we're not even going to look into it. If you see any project that starts saying we're doing AI or pivoting to AI, they have nothing, because they're just going to what the narrative is at the moment. And down underlying the whole base company, they have nothing. And they're just pivoting to market conditions, like left and right. So I kind of agree, yeah.
That's a very key point. So if you're in a project or thinking about a project and they say we're pivoting to AI, run for the hills. You cannot pivot to AI unless you were like doing something like that originally. Like the skill set and money you need is immense. You even look at the top companies that have tried to do this. IBM's a classic example. Big company, lots of tech people, lots of money, and they threw Watson in the bin. So this is a very, very difficult thing to do.
Even Alphabet or Google or whatever, this week they announced, in like an advertisement or something, they it went to go aggressive on their AI, which apparently they've been building a lot longer than Microsoft. But in their announcement, in their ad or something, there was an error.
Yep.
And now their stock price nuked yesterday because of that. And that's like one of the leading companies in the world. So again, and that they don't even use blockchain for their AI.
I was just reading about this morning. So they asked the AI one question and the AI got it wrong. And then you can see the stock price just like boom on the way down. So obviously they're not going well for the AI play. Yeah, it's a difficult place to be.
Yeah, I think one thing I did want to bring up here, closing this off is probably one thing as a crypto investor over recent years is I think this sort of concept that's resonated with me is sort of like this economics concept. It's called like the Keynesian beauty contest. So it's this concept that judges, it's just like this example of a beauty contest, this concept that like the judges, like will the judges vote for the person in the beauty contest that they think is the most, beautiful, like the winner, or will they vote for the one that they think most of the judges will think is the most beautiful? I think it's something similar to that. And this is what I really I think is super critical to understand for crypto investing, because, metaverse, like Facebook in 2021 rebrands to Meta. You see this massive influx, like Adidas buying land on the sandbox and all that. And it's if you identified that, invested in MANA token or SAN token or all the metaverse tokens, you would have made an absolute killing. So assuming you sold some of that. And again, it's almost like you're not investing in that case. You might not even be investing based off because you think Mana has really, good token sinks and value drivers. You might just be investing in it because you think a lot of other market participants are going to be buying into Mana because they think that the metaverse trend is going to really, catch a wave. Yeah. And this is the exact same thing that's happening with AI. It's this Keynesian beauty contest concept that I just keep seeing play out over the years in crypto, where people buy into it just because it's in the news headlines and tech headlines, but they don't actually know, a lot of them, like some of them might, but a lot of them don't actually understand where the value sink is for the token and where the value, if value accrues to it, what are the use cases, how many people are using it. But in saying that, if you just didn't participate in the metaverse trend or the AI trend, you left you potentially miss out on like substantial gains. So it's like this thing you've just got to be aware of with something so nascent, like an asset class that's so nascent that a lot of it's driven off memetics and just like there isn't this widely agreed upon valuation metrics and stuff. So people kind of just go off the vibes and the headlines.
That's
so
it.
It's just a really important point I've started to learn, and it's resonated a lot more deeply with me the last 12 months.
That was spot on. That's because it's based on sentiment rather than getting a balance sheet and income statement and doing, calculations over the top. And then if the market expectations don't meet that, because the market wants certainty. So it's not based on what you think, it's what the entire market thinks. And if you can spot those trends, you have the potential to make a significant amount of money, but also realize that, hey, this is just a trend and it might not be a long-term thing. So if you're putting your hand in that trap, don't leave it in there too long.
Yeah, you got to take it out before it's too late. Exactly.
Yeah, I just add to that. It's just because the markets are so thinly traded, I think. We're seeing a lot of these tokens accelerate so high because of everyone's trying to get in and think this is the way you get exposure to AI, where it's just really not the case. And I'm in the case that I obviously see the long-term implications for this, but remains to be seen whether it's like blockchain based, because like the data sets for these things are just insane. So you can't put that on chain for sure.
And we've got Connor in the chat as well saying that it is just a trend. And I think the team kind of agrees with you as well. A trend that, might go somewhere or might continue to die down as the AI narrative goes away and something else actually happens. But yeah, as he said, it's still going to be around for at least 2 months until something big narrative comes out where regulations comes and takes over. And then that's the talk of crypto.
That's right. And just the last thing, the AI space is another push is going to be GPT-4 when that comes out, which is supposed to be, sometime soon. That will be huge because isn't it something like, 100x bigger than GPT-3, like an insane amount. That is really going to be a huge shift in AI. So that is coming up, and that is something to look out for because that will ripple through the entire economy, and anything with AI, it'll have an effect on.
I'm in the case with you, Bergs, in terms of I'm probably sitting on the fence that I'm seeing this not as a trend, but as something that's significant impact in our lives. And we're going to hear more about this, whether it's going to be in the next 12 months. We're going to see more of these things come to market. Maybe it just gets less attractive in people's eyes. The novelty wears off, but it will stay there. But keen to see if any actual application for crypto happens, which I think is relevant.
Yeah, for sure. Speaking of regulations there at the end, Leon, I think now's the time to start getting into all that's been happening. Where do we start? Nick, I'll hand over to you to kick off.
Cool. Yeah. So overnight, and well, to be honest, last month in January, we did see significant briefings from the White House, from regulators, either being very strong in their language against banks interacting with crypto companies, denying crypto companies potential licenses in the terms of like a big player called Custodia Bank. And now we're seeing with the SEC settle against or take up a case against Kraken against their their staking program. So this is a $30 million settlement against their staking program. Brian Armstrong, the CEO of Coinbase, he come out and said that he's expecting a lot of action against staking, and he's hearing rumors about that. We saw that today, and we see many more industry players come out and be quite vocal in the potential regulation that's coming up and potential unbanking of a lot of these crypto companies in the US. So this is a core thing to look out for, and we'll only continue to see this in the coming year. So I'm not sure if you guys have any strong feelings about this, but it's something that I'm quite cautious about and have been quite cautious about last year when I'm sort of seeing the writing, it was really on the wall.
Yeah, I kind of half expected a lot of 2023 to be about regulation, especially since FTX happened and Luna happened. You know, the government needs time for this to unfold and for them to start making plans, loading their guns. And now they're going to start firing some shots. So I don't know where it'll land, but from my point of view, I feel like it won't land as much on BTC. Because BTC kind of going towards the narrative of being commodity, Ethereum being more security. No one get upset at me. I'm just saying, this might drive the little wedge between them. And when I have to make a decision on which one to lean towards, I try and go towards Bitcoin because it does seem like the safer options, the safer of the two. Not that it's safe, like safe. But yeah, that's my small take there.
Yeah, I agree with that. And I think it'll mainly be the companies that are building on these chains that will be affected. I think the chains themselves will be okay. They'll operate as they are. But if you're a smaller company or a startup and you're doing something that was legal, that is now has heavy governance or
can't afford it.
Yeah, illegal, the compliance budget you will have will go through the roof, and perhaps your company won't work anymore. So you got to make a decision. Am I compliant or do I risk, penalties? So you'll start to see those companies fall away, I think, because I don't think anyone would go up against those penalties. So just be aware of the projects that you're in. And I think we're all just looking forward to clarity. And I'm hoping it's not it happens on this date type thing, but this is what we're thinking. This is the time you have to modify. And this will be the kind of end state to actually give this space a chance.
Yeah, that's probably the biggest issue I've seen a lot of people take against the current enforcement that's going on in the space. If we take the example with Kraken, the SEC basically come out and enforced that $30 million and stopped their staking program from happening. But there was no guidance in what degree was my staking program not above board? Because they did say that there was a 20% yield being offered APY on staking. Now, I'm not even sure what kind of coin is being offered in a 20% in a staking capacity, because normally staking is a lot less. Staking will be that high maybe if the token is very inflationary and more is being minted and you need to stake it to earn those rewards. So there's such a big spectrum in terms of whether that ETH yield then is not being able to be offered by companies like Coinbase or Kraken, or whether it's just these really fringe tokens that probably should have better disclosures. If they're offering 20% APYs, and they probably won't make it for the next, you won't hear about it in a year and a half yet. So, but unfortunately, the current action is just cut it off completely and not have any guidance to the market, which to me is really tough. And I know Nic Carter posted a really good blog post I encourage everybody to read, which talked about this issue of lack of guidance, lack of clarity, lack of engagement, but then also the history and why we've led to this point. So really good read, and I'm really hoping we see more positive collaboration for this sort of thing. But at the moment, it's kind of looking bleak in terms of you're a company that's wanting to offer a security-like product or get regulatory approval for your crypto project. He's saying that a lot of founders he's talking to are just going to stop offering that altogether. And now it's going to be a case for the US whether these people flee again offshore, which happened with FTX, because there's just no regulatory clarity in the US. So that's going to be a major one. I know the UK making some positive steps in terms of their attitudes towards crypto. I know the Middle East will definitely want to capture a lot of this talent, money, and companies that are building in the space. So it's going to be, I think the US is forced to act sooner or later because they're just going to vanquish a lot of this talent to other countries and jurisdictions.
That's it. That's the thing with crypto. You've got jurisdictional arbitrage, so you can go anywhere in the world and you can build. And the first country that says, come and build here, we're safe, we have these incentives, they will scoop up all the talent.
Yeah, for sure. So going in a bit more to what actually happened overnight. To Nick's point, SEC basically, approached Kraken and almost ordered them in a way, or like alleged that they were offering like a security in their program. But so what you're saying is they didn't clarify whether the program itself was a security or whether, it would have been nice to get some more detail on individual tokens being offered. Are they securities? I think that's what Hester Peirce, like a commissioner at the SEC, she's just published in the last hour or two, like a dissent, which she's done many times now. Like it's like you publish a blog post essentially. It's like you dissent to your like higher up, in this case Gary Gensler, the chairman of the SEC. Just it's like publicizing like why you disagree with the action being, and so she explains why. And one of the things, she's just kind of a bit over. She's just questioning the approach of like the SEC, which is the securities kind of watchdog in the US. She's just kind of like questioning like why do we keep sort of
handling everything,
going by enforcement, like regulating by enforcement rather than actual democratic processes of going through and making some law and some regulations so the industry would have more of an understanding. So that's what, to Nick's point, that post with Nic Carter, he sort of talks about this Operation Choke Point where the federal agencies sort of did a similar thing, like removing the banking relationships of several legal industries, but like morally questionable industries like payday lending. There was like vaping and all of that, like online gambling, where they essentially just made it they really strongly suggested to the banks not to service these sorts of companies, and essentially really really significantly damaged like those industries. And it looks like they're doing a similar sort of approach here with crypto. But just to wrap up the Kraken news, it's only for the US citizens as well. So Kraken in like Australia and other countries are still offering staking as well. So that's an important sort of note there. But again, to Bergs's point, it's these are more like the staking as a service providers, these trusted essentially middle like entities, middlemen, where then you've kind of got, okay, well, people will still be able to stake in ideally a decentralized way in time. Like, so that's why we've seen the likes of, Lido, Rocket Pool, Stakewise, all their native tokens have actually gone up in response to this news, even though the market's like tanking at the moment. Because at the moment, Kraken and Coinbase, I think combined, have something like 30% of staked ETH or something significant, where it's like, well, where's all that going to go? And arguably it's bullish for these decentralized sort of like staking technologies, like SSV is another one that's sort of benefiting off this because they're doing like distributed validator technology, or DVT. So their token's been doing really well. So again, you can still stake. It's a US citizen can still, stake on Ethereum, like using Lido or Rocket Pool, or even running a node themselves. But it's definitely going to be a hit to the industry just in terms of the optics of different things getting banned, essentially.
As an outsider looking in, but what happens is it forces the crypto industry to innovate around these rules or with these rules. And if we think about it, just the things you were talking about then, Matt, about telling which companies they can fund, where you can spend your money, all this sort of nonsense. This is why cryptocurrency was invented, because we don't want to be told where we can someone can take our money away, or where we can spend it, or be cut off from payment. And that's why crypto exists. So I'm just really looking forward to the innovation in this space to innovate around those rules. It's going to be brilliant.
Brilliant, or it could be really, really awful in my mind. Like, I'm kind of, and part of me is like, I feel like people are potentially underestimating the potential risks if we look at it on a scale of really, really bad to really, really good. I think at the moment we're assuming base protocols are going to be safe and no one's going to touch what you can do on Ethereum and the base layers themselves, or Solana. But even some applications like Uniswap. So I'm always like trying to think of what's the optimal situation, the best situation, what's the worst that could happen, where we could fit in the middle. So I'm sort of thinking that people are not pricing into the market any action against Uniswap themselves, because we're seeing very aggressive action by the SEC and by US regulators. Uniswap was investigated last year. we don't know what they were investigated for, but in my bear case for all the regulation into 2023 and 2024 is any action against Uniswap itself for offering unregistered securities, because a US citizen can log on to the website and buy whatever token they want. So it's not without the realm of possibility that Uniswap could face potential issues in that regard. Now, I think that's a very minimal chance, maybe sub 10%, but it's one to keep an eye on, because if they're going to head down that route as well, then I think regulation will be even worse than anyone anticipated. So what I'm hoping for is somewhere in the middle, and hopefully, regulators can feel the pressure, because I think a lot of people in the industry just think it's very unfair, and we just want more guidance and clarity for what you can and cannot do. And a lot of the questions are still unanswered, in my opinion, whether what's a commodity, what's a security, what stable coins are treated like. And now we're seeing ability to act in good faith with regulators if you want to offer such products. So a lot going on, I think, in the space, and this will only continue to be the core theme, in my opinion, for the next 18 months, basically.
Yeah, I think I agree with you, where in the short term, it's going to be very, very challenging, and the government may be heavy-handed. But I think medium to long term, once we do get clarity and we can innovate around it, I think this space is just going to boom. Like, honestly, like the amount of innovation that you see going on. And again, like, I'll give you a personal example. I tried to move some money a couple of days ago and just send it to an exchange, and I wanted to buy some Bitcoin, and it didn't go through. And I got a call from a lady, and she was asking me, did you mean to send it to this? Is this Binance? And did you click any link? And did you go here? And I'm like, no, it's all good. It's got my little pay ID. It's got my name there. I work in crypto. It's very, very safe. And she went through like 50 different questions. And she was just telling me how much this happens and how often people get scammed. So if you add that into everything else that's going on to the crypto space, as a government, you would have to act. And in general terms, like, a government is quite heavy-handed, and then you work through with them, and over time you come to, a really, really nice space for both parties.
Yeah, that's it. And then just further, just quick regulatory updates. There was, a few hours ago as well, the New York Department of Financial Services, there was news came out that they're CoinDesk reported that they're being investigated, they're investigating a stablecoin issuer, Paxos. So very old company in the space, like long-standing. Full scope of the investigation is unclear, but their stablecoins include Pax Dollar and Binance USD, which is like a white label sort of solution that they provide Binance. It just they're coming from all angles essentially.
And this is that chokehold we were talking about, right? They're trying to restrict all the banks from working with them. You cut off Binance's USD rails, and now you cut off Paxos, which is Binance's stablecoin rails. So Binance now has like no fiat, no stablecoin to work with. It's really difficult. So they're choking the system.
And what happened with Binance earlier this week? Was it something like the...
Yeah, they had a couple things. They had the thing with the USD where they limited the amount you could, the ability to exchange US dollars.
Yeah, everything over 100K only, no retail people at all.
Yeah, and then that was another one where another core bank that Binance worked with last week was, cut off, and they really distanced themselves from crypto, which is also something to say about Binance, but the broader industry, that there's been a few banks that have come out that have just said, no, I'm staying away from crypto, and really distancing themselves from anything that's not OTC style, where things can be vetted. I think just from fears from regulators. So probably anticipate more banks distancing themselves. And it's kind of an oxymoron in a way, because it's tough, because if you do limit the big banks from using or servicing crypto firms, you have a point where Nic Carter talked in his article that smaller ones that are more risk on and want to meet these demands can't, because then crypto is an overwhelming majority of their business risk. That is just another reason why they may not get involved. So it's kind of they do and they don't, because if they do, then they will probably have to pay higher insurances, high premiums. Yeah. You have the higher risk, and especially if you have a counterparty or a general industry such as crypto that makes up 20-25% plus of your business, that's a massive risk for these small banks that then they may not be able to get serviced, which is what we're talking about. So it's kind of flow-on effects without outright banning or restricting or banning crypto, but it is by effect, restricting who can access it.
Yeah. And if we look at longer term trends, if you think of a pendulum swinging, imagine, Bitcoin kind of starting and then ETH, it's all on one side and it's outside of the financial system. It exists on its own. It's on its little island, and the pendulum kind of swings towards the other side, and we start to build these on-ramps. We build in intermediaries, all these nice services and companies around it. And now it's kind of starting to swing the other way, where you've got all of those companies. Some of them won't be able to operate. You'll be moving back towards that island. And it's just, I think it's just a natural, normal progression.
You just unmuted there, Leon.
Sorry, I was just going to say, and then with your island analogy, in the next 10 years, we'll be going further out from the island with more bigger companies, and then we'll come back in another 20 years. Then in 30 years, we'll go further out. So yeah, that's progress.
Yeah, that's it. But yeah, we'll wrap up. We'll wrap it up there, gents, in terms of the regulatory chat. I suppose the takeaways is that a lot of rumors circulating at the moment that there's even going to be more sort of actions coming out in the coming weeks. As Nick said, it was probably already going to be a big theme of 2023 anyway, but it's kind of already started in early February. The takeaway for investors is really just to be aware of, I guess, the risk associated with any sort of negative regulatory action coming out. That I guess that can be a catalyst for sort of a really decrease in prices. So it's not always, it's another factor, I suppose, to consider when you're investing, and it does get overlooked a lot because it is pretty boring and slow moving, but it does seem to always sort of coalescing around 2023, and a lot of things are coming to a head. So that's why, we'll keep up to date, and that's why it's important to cover.
Yeah, I just finish off by saying another key takeaway for me is that, the ability to put pressure on price, because nobody can access it, everyone stopped from offering those services and those products, then it just means less demand flowing in to buying these, and less, I guess, US dollars, especially if stable coins are targeted. Then it means stablecoins represent, I think, $140 billion sitting on chain. If you have a lot of that leaving the ecosystem or inability to get in, this is a byproduct of reducing demand for ETH, BTC. And then especially for these other alternative cryptocurrencies who are not decentralized and could face a lot of significant issues this year. So I think if you're not decentralized and your crypto asset isn't, that is probably something to pay attention to, definitely.
Yeah, well said. But yeah, for our public, for our podcast listeners and on YouTube as well, thank you for watching this shortened version of the town hall. As we say, we always say on for members. So those of you watching now's a good time to drop in some questions. But yeah, for those of you watching or listening, wanting to learn more about what we do at Collective Shift, and definitely to bug Ben and book in some time with Ben over and get your crypto sort of investment plan sorted, or just to talk about the prospects of the market in general. Definitely head to our website over at collectiveshift.io and follow the prompts there to book in some time. But until then, thank you for listening, and see you next time.
We'll see you next week.